Every candle you see is a message, but not for you. It looks simple, doesn't it? A green candle, a red candle, wicks, shadows, bodies. You think you're reading price action. You think you're seeing market movement. But in reality, you're reading someone else's story. Every candle that appears on your screen is a message written by money. Not yours, not random, smart money. And the cruel truth? That message was never meant for your understanding. It was meant for your reaction. You see, the market doesn't talk in words. It talks in traps, and candles are its language of deception. A green candle doesn't mean buyers are strong. It means buyers were baited. A red candle doesn't mean sellers are in control. It means liquidity has been released. What you think of as momentum is actually manipulation wearing makeup. Every candle has a purpose, to make you believe a lie at the perfect moment. That breakout candle, a trap. That rejection wick, a setup. That sudden spike followed by silence, an illusion of participation. You're not trading patterns, you're trading psychology, and they know exactly how your brain reacts to light and motion. A single green candle is enough to inject hope. A single red one, enough to trigger fear. And that's how they move you, not with logic, but with emotion. Think about it. Why do candlesticks exist in the first place? To visualize emotion, the open, the close, the high, the low. They're not numbers, they're footprints of behavior. But when you stare at them too long, you start mistaking behavior for opportunity. You start believing that every spike means entry, every pullback means reversal, every engulfing candle means trend shift. The market doesn't move because you read it, it moves because you react to it. Here's the irony. When you see a perfect setup, so does everyone else. And that's exactly why it's there. The same bullish engulfing that you see on your screen is being watched by 1,000 other traders, all waiting to buy the same breakout at the same level with the same stop-loss zone. That's not an opportunity. That's a harvest. You're not spotting strength, you're being herded. Every candle is a psychological signal. Long wicks mean hesitation. But hesitation for who? Not for institutions, for you. Because when you see uncertainty, you freeze. When you see aggression, you chase. They know that. That's why markets don't move in straight lines. They move in emotions. Push-pull, hope-fear, expansion-contraction. And every candle adds another sentence to the story they want you to believe. Let's go deeper. When a breakout happens, who do you think causes it? Retail traders entering in the direction of strength. But who benefits? The liquidity hunters waiting on the other side. You see a breakout candle, they see exit liquidity. You see a pullback, they see re-entry confirmation. The chart you stare at is their map of your behavior. Every wick that stops you out is an execution footprint. Every consolidation box that bores you out is emotional conditioning. Candles don't reveal truth, they reveal timing. And timing is the one thing the market controls perfectly. A fake move during low-volume hours creates panic. A genuine one during high-volume hours creates confidence. Both are used to engineer your emotional rhythm. Because in trading, emotion isn't a weakness, it's a resource. You ever wonder why you keep seeing the same patterns? Bull flags, double tops, pin bars. Because those patterns aren't strategies, they're triggers. They work just long enough to gain your trust and fail just in time to keep you uncertain. That uncertainty is profitable for them. It keeps you addicted, keeps you questioning, keeps you learning from people who profit when you lose. The truth is, every candle is part of a conversation you were never invited to. Between institutions, brokers, liquidity providers, the real players. You're just the echo chamber, reacting milliseconds too late to decisions made hours before. You think you're analyzing, you're actually decoding residue. By the time a candle closes, the information that created it has already expired. But you're still there, trying to extract meaning from something that was designed to mislead you. Look closer at the structure of a candle. The open is deception. The close is confirmation. The wick is manipulation. The color is emotion. You're not looking at data. You're looking at design. Each candle is a pixel in a psychological canvas, a pattern of expectation and betrayal. And you, the trader, are both the audience and the performer. They've studied you. Algorithms know what you'll do when you see a long green bar. Your pulse quickens, your mouse hovers, your confidence spikes. You don't see opportunity. You feel it. You don't decide, you react. And the system thrives on reaction. Because predictable emotion, equals predictable liquidity. That's why fakeouts exist. Not to confuse you, but to measure you. Every time you fall for a false breakout, your data becomes part of their model. They record where you entered, where you stopped out, how long you held. That's not conspiracy. That's machine learning. Your fear is literally coded into the algorithm, and every candle you see is an echo of someone else's panic, mapped to your timeline. Let's strip away the illusion. Candles don't move because of buyers and sellers. They move because of imbalances. An imbalance created when one side becomes too confident, too heavy, too visible. And who provides that confidence? Retail traders. The candle doesn't represent what's happening. It represents what's already been decided. You're reading the obituary of a move that died seconds ago. The market uses your biology against you. Green equals safety. Red equals danger. That's not just visual. It's primal. Your brain associates green with growth, red with pain. That's why when you see red candles, your first instinct is to flee. When you see green, you chase. That's not technical analysis. That's color psychology, weaponized. The longer you stare at charts, the deeper the hypnosis runs. You start developing emotional muscle memory. You flinch at wicks. You tense at rejections. You crave confirmation. You stop trading objectively and start trading sensations. Every move becomes personal. And once it's personal, it's predictable. You're no longer in the market. The market is in you. And yet, the paradox remains. The more you study candles, the less they reveal. Because true understanding doesn't come from watching what happened. It comes from knowing why it happened. But retail education doesn't teach why. It teaches when to enter, when to exit, when to react. You're not being taught to think. You're being trained to respond. Like a lab experiment, conditioned through repetition and reward. Ask yourself, why does every candlestick course teach you what already happened? Why are you learning past formations instead of future probabilities? Because the past sells. It feels safe. It gives the illusion of control. And control is the most valuable illusion in the market. Here's the truth they never tell you. Smart money doesn't read candles. It creates them. They engineer reactions. They test liquidity pockets. They push just enough to trigger stops, then reverse. They buy fear and sell greed, both visible in candles, but invisible to the emotional eye. What you call market volatility is simply manipulation wearing rhythm. Every time you get stopped out by 1 pip, that's not coincidence. That's calibration. They need your loss to complete their entry. They need your emotion to fuel their next move. You're not competing with them. You're feeding them. And yet, there's a way out. Not by rejecting candles, but by seeing them for what they are. Symptoms, not signals. You can't predict what they'll do, but you can predict what you will feel. The real edge isn't in reading charts. It's in reading yourself. Once you recognize the pattern of your reactions, when you chase, when you panic, when you freeze, you stop being liquidity. Because the only trader who survives is the one who stops reacting. The one who sees a big candle and waits. Who sees a wick and doesn't flinch. Who observes instead of engages. That's awareness. The final skill no course can teach. The market will always create new traps, new candles, new illusions. But once you understand that those candles are messages not meant for you, you stop being manipulated by their meaning. You start trading the space between them, the silence, the buildup, the imbalance. You stop trying to read the market's language and start observing its intent. And intent never lies. It's in the volume shift before the candle forms. It's in the hesitation before the breakout. It's in the exhaustion after the spike. You won't find it in the colors or the patterns. You'll find it in the context. Every candle you see is a reflection of someone else's decision, a decision already made, a move already completed. Once you understand that, you stop reacting to ghosts. You stop chasing shadows. You start seeing the invisible structure, where the real power moves silently. Because the game was never about predicting candles. It was about predicting people. And the one who predicts emotion wins. If this made you see charts differently, don't just scroll away. Hit like, share this with a trader who still thinks every candle tells the truth, and subscribe to Profit Pulse. Because in the next video, we'll decode the illusion of volatility and expose how every move you see is designed to measure your patience, not your skill. Stay aware, stay patient, and remember, in trading, every candle is a message, just not for you.